Evening. It's Quant Trade Edge, and today I was going to look at a couple of markets. One of them here is the S&P market. We gapped down this morning, rallied and spent most of the day up in new high territory, and then had a breakdown towards the late afternoon. And late afternoon reversals don't typically reverse, meaning when it breaks down in the afternoon, it's good to go pretty much into the close. And here you can see this is roughly the open, and we went back through the open at 13:36 at 1:36 p.m. Central, and we didn't look back. A lot of ways you could play that. Just short through the open using any of these bars here. You would have had great return to risk. Also, you can see there were a lot of one-legged corrections. Let me get a trend line up. This was kind of a simple one-legged correction. This, I don't know if you could even count that. 05555. This is just a hoagie right here. A hoagie like that right under the EMA is perfect for a continuation. Here was a one-legged correction. And, what's been happening, I kind of got lulled to sleep up here. And I went to go play with my little baby. And but when I saw this breaking down, got back, and just not having been in front of the screen, I didn't have the confidence to take any of these. What I had confidence in was a two-legged retracement. So I just waited until we got this two-legged retracement, and this is an extremely clean ABC. And this risk bar here is about 3 points. And I remember because 12 points wasn't even new lows. So that was a very easy trade to take. 12 points would be 67.75. So before even getting to new lows, or even before getting to that swing low, we got 4R off of that two-legged trade. Now, this also, with this kind of surprise, this is the type of environment in which an MOC trade would work. And yes, and by the way, this is all 1 minute charts. When things start moving this hectically, the 1 minutes are very clean and have a lot of volume. Now, I could take this off, and what formed here is somewhat of a cup and handle. You have this cup here and this little handle here, and it broke lower. And sometimes it helps to look at everything with a bullish tint. If I'm just putting in a formula that says 6,000 minus the S&P 500, so you basically get the chart upside down, and you can kind of see how here's your cup, here's your handle. Not the best handle, it's kind of loose. It's like half the size of that cup. But it's just sort of a resistance that was breaking out. And let's go back to the way it's intended to be, EPH4. And you can see the MOC trade. Now, my first indication is that on the 1450, on the 250 bar, we had 12,148 volume. I look for over 10,000. And then this is almost like an MOC starting early, except you had this little trick outside bar, which, when we put our GAN on it, it's going to say that we just had a downswing. From here, everything is down all the way beyond the close, 303, 1503. But if you were actually trading this and trailing bars, this would have stopped you out. That's what those outside bars do. But if you wait for the 255 entry, which is the standard entry for the MOC trade, this opened at 64, so your stop would have been 65.5, and your entry would have been 62.5. And that got you in with no heat and trailing the bars. So once this bar is complete, you can move the stop from that initial stop to above the bar. Once this bar is complete, you move it to above this bar. Once this bar is complete, you move it to above this bar. Once this bar is complete, you move it above this bar. And then 259, your exit is right here at 47.49.75. So your entry was 62.50, and you got 12.75 points in 5 quick minutes with a 3-point risk. So again, that's more than 4-to-1 return on your risk. And again, part of the secret sauce here is recognizing the high volume at 250, but then understanding that somebody's trapped on the close. And again, my mental model is that mom and pop buying or selling mutual funds are the ones that are trapped. So mom and pop got freaked out and sold their mutual funds. They thought they were getting this price up here, 64. They ended up getting 49.75 on their executions. So that's the MOC trade in a nutshell. So when the market starts moving fast, here were 2 opportunities to make 4 times your risk on a 1-minute chart. And, really they both happened between 2:18 and 3 p.m. So the last 40 minutes of the day, you could have made your 4x twice, and that was it. Now, looking forward to setups for tomorrow, one of the better looking setups here is crude oil. On the daily, this is a really good setup bar. So there are a couple of things going on here. When I put in the 2PROC, let's make that a color we can see. So this is a divergence in the 2PROC, because between this high and this high, price went higher, momentum went lower. And then this was an inside bar. We broke higher out of that inside bar and got rejected and put in a red candle. So you have a trap here. You have a red candle. When we take out this low, which we've already done, that starts the potential for an ABC, which so far this is all just a hoagie. Off of that low. And I'm not sure when it's going to trigger, if it's going to want to trigger in Europe, or if it would even wait for the US. But, that's just something we're monitoring for a 4X trade. And, going back on what we learned about trading crude oil on a Thursday, the EIA bar was this bar right here. You can see this high volume bar, this 15-minute bar. So basically, we had this initial test up and fail. We came out of the bottom, and then we got rejected by that range, and we're coming lower. So that's a significant range to look at, and should serve as resistance overnight. But yeah, I'm looking for the 4X trade to set up here on crude oil because of this beautiful daily setup bar. We have one leg up. We need a leg down before another leg up. And red candle, tail, trap, divergence, just has a lot of good markings that we could have a good down day and a good 4X setup right there. Copper looks similar. Similar in that we did go test above this 20-day high and reject, so it's somewhat of a turtle soup. And again, this is a good sized tail and a red body. So if we take out that low, which we haven't done yet, so far that low has held. But if we take out that low, that's also an area where we can look for a 4X trade. And also here, you've got these divergences where this is a higher high with lower momentum than over here. This isn't a true 3 hump divergence because we didn't get 3 higher highs. We only got this higher high over here. But again, that's just something else to keep an eye on. In terms of the S&P, yes, this was a ugly key reversal type bar, also in the NASDAQ. But until we take out that low, it's still an up bar in the Gann sequence. Here's our Gann sequence. We're still an up bar. That's still an up bar. And really, what this has done is set up a pinball buy. I mean, this is kind of a divergence of sorts, but we have a pinball buy. So, so put up the LVR pinball. Yeah, this dip in the oscillator to 16, that's kind of a buy. So we could just have a nice inside day that feels like an up day. And then it's an inside day, could go any which way it wants. And NASDAQ looks exactly the same. So this could just be a good looking up day, which is really just an inside day. And then it can do what it wants. It could resume the trend, which is very possible. We have a strong trend, one day flush, could easily resume. Or it could be the start of a bigger pullback. So that remains to be seen. Again, any questions, feel free to ask and leave some comments, and I'm happy to respond to them.